So your bot's killing it in paper mode. But what happens when you go live? That's the difference between simulation and reality. And if you're building with Alpaca, knowing how to transition can make or break your results. This is FinTech Bot Focused, where we dissect the tools, platforms, and data powering smarter automated trading. Subscribe if you're into bots that actually work in the real world. Paper trading is a simulated trading environment that mimics real market conditions, but without putting real capital on the line. With Alpaca, you get real-time market quotes, simulated order execution, and the ability to test and tweak your automation without any risk. It's your sandbox. Build, break, improve, all without consequences. For automation, it's essential. Here's why. Debugging. Catch errors and edge cases before your code hits live capital. Validation. Forward test on live markets without fear of loss. Strategy design. Backtest ideas, fine-tune logic, and simulate edge before it gets expensive. But there's a catch. Paper performance does not equal live performance. Here's why. First, perfect fills. Simulators assume you get the best price instantly, but in reality, real fills involve slippage, latency, and competition. Second, no emotions. You won't feel greed, panic, or hesitation in paper mode, but you definitely will when real money's moving. And third, no liquidity pressure. Paper bots don't push against real spreads, order books, or volume constraints. So, while paper mode is great for testing functionality, it doesn't really test execution pressure. If you're moving from paper to live, do this. Simulate fees and slippage in your logic before flipping live. Start small, just one position with a tiny size, and use real fills. Use walk-forward testing. Train your bot on one dataset, validate on another, then roll forward. Monitor live performance closely, especially trade timing, fill rates, and partial executions. Don't go from 0 to 100. Let your bot prove itself first. If you're using Alpaca's API, here's your roadmap. First, build and validate your strategy in paper mode. Be sure to include logic for slippage, commissions, and partial fills. Then, go live with minimal capital. And, remember to scale based on real metrics, not just simulated confidence. And once you're live, track results with more than just profit and loss. You can upload your trade logs to the AI Bot Trade Analyzer at fintechbotfocused.com. It, breaks down strategy weaknesses, fill quality, and risk exposure using real AI. The link's in the description. So let's compare paper trading and live trading across key aspects. When it comes to execution, simulated trading often gives you perfect fills, but in a live market, you might experience slippage, delays, or even partial fills. In a simulated environment, there's really no emotional pressure. But when you're trading live, emotional pressure can be pretty high, with fear, greed, and hesitation all coming into play. The market behavior you see in a simulator is based on a simulated order book, while live trading exposes you to true liquidity and the real impact of volume in the market. So capital is at risk. We're talking about real money here, and honestly, real consequences. Paper trading is critical if you're building bots, but, don't mistake it for a finished test. Treat it like a wind tunnel. It tells you how your strategy could fly. Only live markets show how it performs under pressure. Have you gone from paper to live with a bot? What changed? What broke? What surprised you? Drop your story in the comments. Your experience might save someone else a costly mistake. And if this helped clarify the gap between sim and real, hit like and subscribe to FinTech Bot Focused, where we build bots that are more than just backtest bragging. Catch you in the next one.